Hello, everyone. What's good? What's going on? It's a wonderful Tuesday morning on the 28th of July. And we are here once again to take a look at the gold market and then see what exactly is going on there. And once we are done with that area, we can basically go on to other pairs and then see. You want to probably go to the gold market first. Right? We'll probably take a look at the gold market first. Then, like subsequently, we'll come back and then take a look at the, yeah. Okay. So you know what I'm going to do? I'll first of all go to the other pairs. Then finally, I'll end with gold, right? But it's going to be real quick. It's going to be real quick, right? It's going to be real quick. If you are here, give me some fire in the comment section. Give me some fire in the comment section. Let me know how the session is actually going. Is the sound okay? Is the video okay? Is the quality perfect? Just let me know what exactly is going on. Yes. All right. Give me shout outs, and then I would basically also give you one. If I see you in the comment section, I'll give you that shout out. So let me see. It's clear. All right. So let me give a few people shout outs who are currently on the call. If you are here on the call, kindly put a message in the comment section. Let me see your message, and then I'll basically bring you up. So hello, Kekeli Forex. Kekeli Forex, what's good? What's good? How's things going? Emmanuel, I see you. Thanks for being on the live. Kembra, what's good? Charlie Kembra, we get some giggle. We go vibe. Right. Daniel, I see you. Good morning to you as well. Good morning to you, Bakari. Good morning, Bakari. Good morning. Theophilos, I see you. Yes, Theophilos, I see you. Mark, I see you. We have Raphael. Raphael is here, right? And what country are you from? You can put the flag in there, or you can type the country. Let me see what country you are from, right? Daniel King, I see you. Dr. Daniel, I see you. Who else? We have Ernest. Ernest is also here. We have Elom. Elom is here. Kobe Black. What country are you in currently? Right. So put that in the comment section. Let's see. So Raphael is in Ghana. Awesome. Kobe Black, I see you. I see Kobe Black. Great. So what country are you from? All right. Emmanuel is from Tanzania. Emmanuel, welcome. How's it like in Tanzania? So Emmanuel is from Tanzania. Raphael is from Ghana. James is from Ghana. Awesome, guys. All right. I'm waiting for the rest of you to put it in there. All right. Great. And then also, I would entreat you all to share the link to your friends, share to your social media pages, share it out there, and let everyone join, every one of your friends join in. Money Instinct, I see you. From Ghana. Money Instinct. Elom from Ghana. Right? Elom is from Ghana. Bakari is from Nigeria. We have Nigeria in the house. Awesome. This is really beautiful. So guys, share the link right now. Let me just give you just 2 minutes to share the link, right? Let's share the link right now. Share it to friends, share it to family, so that they can join in, right? So I'm sharing it right now. Great. Yeah. Share the link, share the link. And then we can start our conversation. Live on YouTube. All right, great. So Kobe is from Dubai. Mark is from Ghana. Thank you all for being on the live session today. Let's basically go in there and then take a look at what exactly is happening. So I'm going to just enlarge this and then basically we can move on with that. Let's go like that. All right. Is the chat okay? Is the chat visible? All right. So I cleared everything on my chart so that we can be able to take it from scratch. So the first things I'm going to put on is the indicators that I use on here, right? What sort of indicators do I use? Usually a lot of individuals come to me and are like, okay, KEMMA, I realize that you don't use indicators. And I'm like, I use indicators. They're okay, but we don't see the lines on your chart. I'm like, they are right there. Every time you look at the chart, they are basically there. It's just that you probably are not paying attention to, like the indicators that I'm using, or you probably do not understand what indicators actually are. Indicators, as the name actually suggests, indicate things, right? They indicate things. So indicators are not necessarily only for you to be able to see that, okay, so buy, okay, then I'm gonna buy. Oh, okay, I'm indicating sell, okay, I'm gonna sell. No, indicators can basically show you the opening of a new trading session. So it's indicating, like that particular trading session, probably Tokyo, London, and New York session, right? Open and close, open and close. That is an indication. So that is an indicator that can actually do that. There's an indicator that actually shows you the opening of the week and the close of the week, the opening of a month and the close of a month. That is also an indicator. And so at the end of the day, let's have that particular understanding that when it comes to indicators, we could basically open up the conversation and then speak out of the context of just buying and selling, and even go further to what can actually be indicated on the market for me to actually feel comfortable. I hope you understand what I mean. So when I come in here, the first indicators that I use two indicators, two main indicators, right? The first one that I use is called the SFL sessions open. Now, when I click that, what happens is you see that nothing happens on the chart currently. Yes, because I'm on the 4-hour time frame, and that indicator is going to be presented on the lower time frame perspective. What does it do? It just basically shows me the session open and close. So when I go to the 15 minutes time frame, you can actually see clearly that it's here, right? London, New York, Tokyo. That is basically what it does. And I'm just going to double click on it. Then I can basically go through and then And then just try as much as possible to customize it to how exactly I feel like is good for me. So with the colors that I'm seeing, blue, orange, and green, usually I don't like, like that. I'm just gonna turn it all off and then make it black, right? Black. That's what that's what I feel, like is good for me. So I'm just gonna turn this black as well, turn that also black. Basically, London, Tokyo, New York, all black, right? Yeah, all black. And once I have New York as well, black, you can see that it's changing on the background. So all of them are now black. And then I'll come here, I'll also change this one into black. That is the CST open, right? Yep. Then basically I'll just go to OK. So once I go to OK, you realize that, okay, now everything is black. Landing session just opened, a couple of minutes ago, if it's not already an hour. Yes, it opened at 7, so it's already been an hour. So here you can see that line that shows the landing open and then shows how price dipped into that area and then started dropping towards the downside and I'm currently on the 15 minutes time frame, monitoring what exactly price is doing, right? We'll go, or we'll come back to that 15 minutes time frame and then take a look at what exactly we can be able to have on there. For now, let us move from here and go back to the hard time frame perspective and then see how price is dealing on there. Before I go, there's another thing that I need to do. I need to make sure that this stays on the 15 minutes time frame downward. So 15, 5, 1 minute. I don't want to see it on 30 minutes upward. So what I'm going to do is to go to visibility and then just basically turn off everything here. Range, month, weeks, days, hours, and then I'll leave from minutes. And even the minute, even with the minute, you can see from 1 minute to 59 minutes, I'm going to lower it all the way down and bring it to 15 minutes. And once I get to 15 minutes, I'm just going to basically leave it like that. Click OK. And it means that if I go to 30 minutes, I'm not going to see this any longer. It disappears and my chart is basically clear. So if I want to see a clear chart, I can basically come to the 30 minutes upward and I can see a clear chart. If I want to see my Tokyo, London, and New York openings, I can basically come to the lower time frame perspective, which is the 15 minutes time frame, 5 minutes, and 1 minute. And I can be able to take a look at that. Now let's move on. The next indicator that I use is the month/week breaks, right? That is it here. And so I'm going to click on that. The ATA is icostan. I'm going to click on that and then basically open that. Now, once I open that, you can see that it's already in here. But with that, let's go to the higher time frame perspective to broaden it up so that we can be able to see. So coming into the 4-hour time frame perspective, this is what we have. You can see those lines faint at the background because I made them that faint. You can actually customize the color however you want, and then even increase the opacity or reduce the opacity, or lies on you as a trader. You have total control of what you are doing in the market, right? So at the end of the day, I should expect you to be able to choose the right thing and nothing that will cloud your judgment on the chart. All right. Yeah. Great. So let's move on. Before I even go on, let me also say that everything that I teach here, everything that I say here is basically fully educational, for educational purposes only. All right. For educational purposes only. Under no circumstance would they be taken into consideration as an advice for you to take a decision. Whatever I do is what I'm showing you that I do on the market on a daily basis. And if you want to take a decision along with it, that would lie with you as an individual trader. And basically that is it. All right. So now let's move on. So with this, I am coming to the inputs and I don't want to see the monthly breaks, right? So I'm going to take that off. So I'm taking off the monthly breaks and then I'm just going to leave the weekly breaks, right? And then also with the weekly breaks, I'm probably not going to be wanting to see them on the monthly and then weeks. I'll probably see them from the days all the way down. Even with the days, I'll probably, consider not looking at it on the days. I'll look at it from the 4 hours all the way towards the downside. And then that's basically it. So once I click on OK, it means that it ends at 4-hour time frame. When I go to the daily time frame, I have a clear chart that does not have those lines, right? And if I come to 4-hour, basically what it's showing you is this is where this week opened. You can see that. This is where it opened, and then it gapped all the way towards the upside, then started pushing back towards the downside like that. All right. So we are still within the week. Today is just Tuesday. So whatever happened around this area, that's Monday. Then we enter Tuesday around this region, and Tuesday will also flow along, and then Wednesday, and then Thursday, and then Friday. Then we have a new line coming in at the end of the week, and then the open of the new week. So you can see how here you can basically tell that price moves from this particular area. That was the opening of the previous week. Price rallied all the way into the high point of this area and then subsequently plunged before the end of the week towards this region and then came finally to close here around this area. And we now have a new week coming in place. So that is just the two main indicators that I use on my chart. If there's any other indicator that I use, I don't use it on TradingView. I use it on my MT5 platform, right? And that is basically it. So let's move forward. So now it's time to go all the way to the higher time frame to view market from that particular perspective. And this is what we had. If you joined the previous live session, if you didn't join it, there was some educative stuff that we talked about in there. You can basically join and then see, like for yourself. When you come back into this particular area, following what I said the last time, with how price has basically been rallying towards the upside, you can clearly see that the first ever very significant pullback that we have had in a macro perspective is this current one, right? All the way from 5,600 dropping all the way to currently $4,048, right? And what I basically said was, with that kind of push coming in and then the first break of that particular candle of focus that I have here, which is the January's low, right? The first break beneath that area, I was saying that two main things could happen: whether price would actually continue that movement towards the downside, and probably we may be looking at price coming into the next area. And then I also explained that the reason why I'm looking at this area is because we are looking at price drop excessively, and we are asking ourselves, where could pose as a threat for price dropping further, whereby it would come to serve as a support, to prevent price from moving further towards the downside. That's basically what I said the last time, right? Now, this area poses as an area where we could actually have that. Subsequently, I'll explain why exactly that is, right? So around this area, we are saying that if price should drop further, we could see price come into that particular region. And the second thing that could happen is price could first of all push further towards the upside to grab liquidity from the upside before actually dropping. We have seen it happen over and over again, right? So now we are going to assume that any of these two things could happen on the market, whether going towards the upside to grab liquidity and drop, or continue from this area. So constantly when we are here on the lower time frame perspective, we are asking ourselves, are you going to go towards the upside? In which case we are going to be using confirmations from the lower time frame perspective in order to join you towards the upside. And everybody has a confirmation that they trade with on the market. You should, if you do not have. And that is why there are mentors out there teaching their confirmations to individual, like retail traders, for them to be able to use that criteria to join in on the market at every point in time. All right. Some are very, very easy to understand. Others, you need a little bit of effort, but all you need to do is to understand what you're doing. And once you understand that, it is easy to flow through from there. So from that area, you're like, okay, this confirmation is what I'm getting. It is giving me buy signals. I'm entering for the buys. And you understand that, okay, the buys may be coming into this area. So once the buys are beginning to get there, I should be careful and I should start looking out for myself. Whilst price is going towards the upside, also on the lower time frame, it's not just going to keep traveling towards the upside. You're going to have a push. You're going to have pullbacks in the market. And so you should be basically have that criteria to help you navigate on a daily basis, up and down flow, for you to be able to pick trades upward and downwards when necessary. I'll be honest with what I mean. So around this region, what I basically do is just draw a top-down analysis, and my top-down analysis comes from the monthly time frame, and I pick specific candles called the candle of focus to be able to do that. And I'm just gonna pick this, turn on the magnet, put it here as my monthly high region to look out for. So that is an area to look out for, right? So I'm just basically marking out areas to look out for, sort of. And I'm just gonna do a monthly high, so monthly high region. And then I'm just also going to come into the lows of that area and then mark monthly lows region. So if you missed out on the previous session, I'm actually doing this again for you to see how exactly it's done, right? But there's the whole theory behind it that I teach, at the back end, all right? So coming to the weekly time frame perspective, I'm basically like, okay, these two extreme points are where I'm basically looking out for currently. People do demand and supply analysis. I do demand and supply analysis, but on currency pairs. When it comes to assets like gold, NASDAQ, US30, and then all being very volatile pairs, doing demand and supply analysis on them could be quite difficult. You could actually have so many lines on your chart that you don't even know how exactly to navigate through them. And so this becomes a simpler way for you to use with the volatile pairs. I hope you understand. So looking at this with a weekly perspective, I'm going to basically choose that as my weekly high, the same weekly high that we used last week. The same weekly high that we used last week. And then the weekly low, I'm basically going to choose that as the weekly low perspective that I use weekly low perspective, the same one that I used last week. Currently, I've not had any break above the region, and I've not had any break above that lower region. I could basically see price just within the last 4 weeks, just running upward and downward between that particular area. And also the weekly is showing some strong indication of continuations towards the downside until price finally is able to break above this one and then close above it, which is the $4,220 region, right? If price is finally able to close above that region, then I'm going to basically say, hey, you know what? Now that price has closed above this region, there is the need to see for extra continuation towards the upside. That is not to say that you have to wait all the way for it to break. You can actually use confirmations. As I've been saying over and over, you can use confirmations to trade towards the upside. If you get that confirmations, definitely we'll trade towards the upside. And if the confirmations are pointing towards the downside as well, we will trade those confirmations towards the downside. I hope you get it. Great. All right, let's move on. And so around this area, I have my weekly perspective. Then I move down to the daily perspective that any trader could basically do. So for us, you have your head wrapped around the theory surrounding it, right? So we have daily high, so daily high region, and then we have my significant daily low region. So you see that it's not any daily high that I'm picking. There are specific high regions and low regions. So it's not just any low region and any high region that I'm actually picking, right? So I have my daily high and daily low intact. And basically that is it. That is what I have for my top-down analysis. I'm basically done. It means that, okay, so now I have my zones marked up. When I come into any area, there are two main regions that I'm looking out for currently. And what is actually being presented on there is showing me whether to take a decision for buy or take a decision for sell. Where I am sitting currently, is it a premium region or a discount region? Then I'm basically going to move on with it like that, right? So coming into that area, 4-hour time frame perspective. 4-hour time frame perspective. Great. So this is what I'm seeing. So the new week opened with this strong rally all the way towards the upside. After that rally came in, we started seeing that decline in the price to cover up that particular gap that came in. So I'm using forex.com. Forex.com usually closes up the gap with good price action so that you don't see all those opening and then all and stuff. So I use forex.com. Very, very great area to be when I'm using TradingView. So that drop all the way was to cover up that particular gap. And then we have had price come all the way towards the downside. Now, it's time for me to mark out zones where it is necessary for price to actually tap into. One of the zones where we were looking forward to during the last week was this particular area, this one that is sitting here. We were looking for this one. And that is exactly where price actually came into to tap into and then reject off. So like that, right? Like that. So price, you could see that price actually came back, tapped into the region, and then started dropping towards the downside, right? So that rally that came in the early part of the week, that rally tapped into this region and then now started declining towards the downside. In fact, this move, we were waiting for it last week. We were looking for it for the push towards the upside, and we waited and waited and it didn't come through. And that's how market actually is. Sometimes we need to be able to understand that, hey, this is how it is, and then we follow through on it. I hope you get it. Great. Let's move on. So now, what are the other zones that I could basically point out that, okay, price may be looking to come into? I was waiting for price to come into this particular region during last week, right? And then also price came close to that particular region and just moved out of that area. And I'm sort of having the notion that in this week, price may want to still come back into that particular region to tap into that region. If it doesn't, that's fine. We will use that criteria to still trade it where the direction is going to go to. But if it does, then we are going to be looking at that area as a very key significant zone. I would, of course, refine it very soon for us to be able to take a look at what exactly is happening around this area. Because that area has been tapped into, I also have the notion that because it has been tapped into, when price is coming back into that area, the next time we might violate that particular area or break out of that particular area with the kind of strength that price is gonna garner. Let us just see how price would react around that area. So at the end of the day, these are two extreme regions from upward and then downward that I'm looking at currently. Let's take a look at the structure for a moment, right? we can clearly see the structure of the market coming towards the downside. It's very visible. You can see that high point around this area, and then that drop down all the way into this lows, then high into this area, then drop down into this lows, and then back into this high point, and then price coming all the way down, rejecting off of this area, and then starting to move back towards the upside like this, right? Now, if you are basically following through on the structure, what we basically say is, okay, so price up, right, like that, and then price down. Now this is a swing, and within that particular swing has its own what up and downs as well. So you can see that it has its own up down. So sometimes a lot of individuals confuse a particular swing or a particular movement within a swing for the main swing, but the swing is there, and then we have what it's market structure also, the swing that comes with market structure. So that was what we call usually the internal structure, right? So you could basically see price move up, price move down, price move up. Then within this as well, you can basically watch for price up and down like that. I hope you get it. So we don't confuse this with that. I hope you're getting the concept. Great. So at the end of the day, let's take a look at what exactly is happening. Another market structure concept that a lot of people mix up is significant swing highs and lows in the market. We have up, we have down, we have up, we have down, up, like that. Now, if you have up here, that is a swing high. If you have this area, that's a swing low. We have a swing high, swing low. You get it. Now, at the end of the day, that swing low point that we have around this region, if price should be able to come back down, that is when we have a break of a what? Of a structural area, which means that this becomes the new significant swing low, having introduced a new variable, which is the what? A lower low region in a higher high, higher low market, right? That is basic market structure. But when you see price actually going towards the downside like that, up, down, down, up, and then price comes all the way into this region and then stays here, right? Still, the significant swing low is this region. But a lot of us usually tag this area rather as a significant swing low point, which, you know, like sometimes ends up disappointing us. And we need to be able to take precautionary measures when we are taking a look at that. From this area, price could basically point towards the upside like this, and it could still drop towards the downside. And it will be a very perfect and valid what? Movement towards the downside, because it has not necessarily created any form of what? Form of continuation for, you know, the upside, right? It has not created any criteria to show that, okay, we are moving towards the upside. What we are seeing here is a rejection, a failure to break downward, which means that price could still push up and then what? Still drop towards the downside. So the significant point are still this area and that area. You get it? And this whole area is still within that significant point. You get it? I don't know if you understand me. So what you can basically do is you look at the internal structure of what is happening here, and not, you know, like target as the whole structure in its, you know, like self. You get it? So sometimes price will come in here, reject off this area, come back up, and then still drop significantly towards the downside. Sometimes price could basically react off that region like that, pull back, and then what? Basically now break that high point around this area, and then now we can basically what? Start looking at price moving towards the upside. You get it? Yeah. So at the end of the day, let me clear this so that we can basically continue with that. So at the end of the day, when we come into this particular region, right, and we are taking a look at this area, we are looking at the internal structure that is happening within this, coming towards the downside. And we are saying that, okay, so there's still a significant high point, and that significant high point is still sitting all the way up here, right? Somewhere up here. And then there's still that what drop that it came in with, and then that low point around this area. And then we are saying that, okay, now there's a tendency for price to either move up, right, into premium regions, which basically starts all the way from somewhere around this region, like that, all the way into that perspective. And then we could basically see price reacting from anywhere around this region. It could be here, it could be further into the highs of that area before rejecting. And this is monthly time frame perspective push that we are talking about before any sort of rejection will be expected. All right. If we go to the monthly time frame perspective, all you'll be seeing is a long push from here back into the highs of this area, and the tendency for price to reject off and drop down in continuation. Basically, that's all you'll be seeing, because the candle is a condensed form of a structure. How do you understand what I mean? Great. So let's move on. So coming into the 4-hour perspective, again, we are taking a look at what exactly is happening here. We are saying that, okay, every break of an area shows that we might be traveling into the next. So a break of the daily shows that we might be traveling into the weekly. A break of the weekly shows that we might be traveling into the monthlies, like highs, and then basically that is it. So whenever I'm watching the chart with this kind of top-down analysis, when price gets into some of these areas, I'm very, very vigilant on how exactly I monitor the price from that area, because I know that from this area, there's a tendency for price to actually react off and then move out of that region, whether it's 4-hour, daily, weekly, or even monthly. The higher time frame we go, the higher we go into the time frames, the more significant that area becomes. That is basically it. So the more we go into the weekly area is stronger than 4-hour areas. 4-hour areas are lower time frame. They could actually break, like all the way to 1 hour, 30 minutes, they could easily break. But when it comes to lower time frame, higher time frame perspective, it's hard for it to actually break. And so if we come into this particular area, for instance, you could see daily came all the way into the highs, rejected off, and then started coming back towards the downside. What do we see? We see daily strong movement upward into the highs of that area, and then a rejection back towards the downside. That is basically what I'm implying. And this could actually continue towards the downside because that's what the daily is communicating. Strong bearish presence. You get it? Now, even though the daily is communicating strong bearish presence, when you go to the lower time frame, whatever will happen on the daily starts from the lower time frame perspective. So you could actually have an eye on the lower time frame to see confirmations from there to start trading buys as well. And how do you do that? You basically take a look at the price action. So the same price action that you're looking at the daily that is saying that we might be going down is telling you that, yes, you can see on the daily that we might be going down, but on the lower time frame, that down movement is not ready yet. So if you are seeing bullish on the lower time frame perspective, please pay attention to the bullish. And then what? Go for the bullish. And once it confirms for the daily, you can basically just align with it and then go forth with it. So daily might be saying bearish. You can go to 4-hour, and 4-hour might be saying bullish, because daily is telling you that, yes, even though we are saying bearish, we are not ready to do that yet. When the 4-hour now aligns bearish with the daily, now you can basically see, okay, daily is bearish, 4-hour is bearish. Let's take a look at our entry time frame and then see if we have bearish confirmation to actually jump in on there. And that is basically how, simple the market or an individual can basically make the market, simple for themselves. I'll be getting. So let's refine this. So coming into the lower time frame, all I'm trying to do is to refine this particular area to be able to close it up a little bit, because those regions are quite wide. So here, I'm going to basically mark this. I'm going to basically reduce this from here, which when I reduce, you realize that, okay, so there's an area where price has not tapped into just yet, right? Which is this particular high region or supply region around this particular area. So I'm going to key that particular one in like that. There's a tendency for price to go above that area, probably coming all the way into the highs of this region. And that is why in the market, you cannot basically say an area is certain. You can only target as a probabilistic approach, right? With a probabilistic approach saying that, okay, there's a probability that this area would basically tap in. If it does not happen, then I'm looking at my next area. So that at the end of the day, you don't basically just put your whole eggs on one basket and say, okay, you know what? This is the area that is gonna reject off. You'll be shocked. All right. So I have other buy regions, I have other sell regions, but let's take a look at them. So this area like this, I'm still tagging this area as a very interesting region to look out for and for price to come into, to tap into that area before I look out for any sort of rejections again, right? So for now, I'm looking at this area. There's a tendency for price to drop from this region to that region, right? If you ask me, in continuation of whatever price has, like that drop from here, in continuation of that price, I could probably see that 350 pip drop from here into that region before probably we reject off this area and start seeing price move towards the upside, right? So it's all going to be based on confirmation. So have patience, right? That confirmation, I've not gotten it yet. So have patience. Great. I've not gotten it yet. So have patience, right? Now, Dropping down into 45, let's see if we can refine it more. 30 minutes. Let's see if we can. Okay, so 45. I think I can be able to do something like that. Right? Something like that. And usually, if you mark out such regions, because they are quite wide, that's why I usually do confirmations, right? Take a look at that. 120 pips. 120 pips, right? That's why usually I look out for confirmations. And my confirmations usually means that sometimes I'm not going to jump into the trade with everybody else. They are going to get in ahead of me. But sometimes too, it means that I'm going to get one of the great trades in the market. You know why? Because I'll get a trade that does not stress me too much. It is actually at the very, very area where it's about to move. Then I am going to be joining in on that particular trade, right? Now, there are things that we can control in the market and things that we cannot control. And we must be able to know what things we can control and what things we cannot control. I basically tell this to my mentees all the time. Now, let's just basically talk about that just briefly, right? Whilst we are monitoring the chart. Around this area, what are some of the things that we can control? So there are three main domain areas, right? Absolute control. So we have absolute control, absolute control. So things that you can control, like you have full control over, right? Then we have partial control. And then finally, we have no control, right? These are three main areas that we must always take a look at when we are in the market, taking a look at the market. I hope you get it. If you're a trader, this is an information for you. There are three main areas that you should focus on: absolute control, partial control areas, and no control areas. These domains would actually tell you what to rush about and what to have patience about. You get it? What you need to act as fast as possible, and what you don't need to worry. You just need to sit back and then watch. Now, let me show you some of these things. Now, absolute control, partial control, no control. Absolute control. For instance, I know my criteria in the market, right? I know my criteria in the market, my criteria. When I say my criteria, I'm looking at a few things, right? Now watch this. I know what I look out for when I'm trying to find the direction of the market. Right? When I'm trying to find the direction of the market, I know what to look out for. This is not in relation to where market is going. This is in relation to my criteria that shows me where the direction is going to go. You understand? That criteria is with me. So strategy is in your absolute control. How to be able to navigate the market, absolute control. Your entry criteria, right? Entry. So your entries, what you determine to do before you jump into a trade, right? So your entry criteria, absolute control. What do you look out for? Maybe you take a look at this candle, that candle, this formation, a break of this region. It's all in your control. If those regions are not broken and you jump into that particular trade, guy, you are not necessarily thinking straight, right? And honestly, that's one of the problems that a lot of retail traders have in the industry. You get it? We don't think straight, and that's what makes us significant losses in the market. And let's move on, right? We don't think straight, and that's what makes us some significant losses in the market. I hope you get it. Now, if I'm thinking straight, then it means that I have an area in the market where I'm looking forward for market to break. If that area has not broken, then I'm not jumping into the trade just yet. You get what I mean? Then that means, okay, once the area breaks, now I come into the market and jump into the market and then move on with it. You get it? So there's a criteria that I'm looking at. And until that criteria is fulfilled, I'm not jumping into the market. That is in my control. Nobody tells me what to do. I sit behind the chart. I determine what to do. That's absolute control. You get it? Great. Now, let's go to the next one, which is partial control. When it comes to partial control, we are basically talking about things like POIs, right? Point of interest. Point of interest. Let's talk about this. You see these regions that I've drawn in the market, here and then there. They are points of interest. Areas where if market gets to, I'll be interested in taking an action, or I'll be interested in seeing what market is going to do around that particular area based on what my entry criteria. So if price comes into that area, that is the first point of call for a criteria. Okay, price has entered my region. Now, what do I look out for in order to jump into a trade? Okay, I look out for ABC. Okay, ABC has been what? Has been set for me to take a look at. Now it's time for me to jump into the trade. I'm in on that trade. So point of interest is partial because you do not know exactly where market is going to use. And that is why we say that it is not what? It is not certainty, it's probability. So at the end of the day, you draw more than one point of interest. You look out for more than one point of interest, or you look out for all the possible points of interest that you can find, so that you tell yourself that, hey, if it is not this area, it could be that area. And that is one of the prime reasons why we use good risk reward management on the market, because you may never know what area. You might think that it is this area, and price will break through that area, and then what? And then tackle a next area that is right beneath it. And so if you are just basically going to jump into that trade around this region, just because, okay, we are here, okay, let's jump into the trade around this particular area, right? Right. What if that is the only area that you have? What if market is basically coming just here to tap into this region here, right? Here, like that, plunging downwards, tapping into this region, and then now beginning to shoot towards the upside. You get it? So individuals basically set for themselves these criteria so that they can be able to what? They can be able to at least know what to do at what time. So at least if I have two areas, I'm like, okay, you know what? When price comes into the first area, this is what decision I'm going to make. Instead of using 0.5 in the market, I'm going to be using 0.2. And if price actually starts moving out of that area, and I get another entry, I'm going to add on the remaining entry on it. But if price violates that particular region, I still have 0.3 to use for the next area to test that area as well to see if price is going to move from there. At the end of the day, if price actually violates this region like that, and then comes into this particular area, and now this area also is your point of interest, and you try it again, and price begins to move, guess what? Price did not violate you for the day. Price gave you a second opportunity for you to be able to come in and then earn back what you lost, and even earn more money if you're able to stay in that trade for longer. You get it. You get a picture. Great. So that is what? That is the partial control. So point of interest is an example of a partial control. You don't have absolute control of the area, but you have an idea of what areas could be used. And the areas that you have drawn, price may not use those areas, but another time price may use those areas. So you are not necessarily too certain about it. So it's not within your total control for price to use an area. That's why I have a problem when I hear people say price must move out of this area. Price will move out of this area. Price should move out of this area. You get it? You say price may use this particular region as a rejection zone. How do you get it? These are two different communications. There's a tendency that price could use this area as a rejection zone before moving towards the upside. There's a tendency that price could use this area as it means that you are leaving room for what? Error, which means that there's a tendency that price may not use the zone. How do you get it? But you are marking that zone because you feel that there is a higher percentage that that price uses that particular zone. Then the final one, which is no control. No control. You have no control over. No control. An example of no control is time. Time. And this is what gets a lot of traders. This one. This one. It will kill you right now. Time. 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 This one. Time. Right? How many of you know what time today gold is going to move Okay, so this is an area that we have basically, like pointed out. Okay, price could come into this. How many of you know exact time that price is going to come? If you know, please, I beg you, message me with it. I need it. Huh? I'm going to give you my number. If you know, please message me with it. I need it. I'm going to put it here, right? I'm going to put that number here. If you know, please message me. I need it. +233 208570888, right? If you know, please, please, I need it. I wish I could highlight it. I don't know how exactly to. So I'm just gonna leave it like that. I hope you get it. Time is not in the control of anybody. Nobody can control time. That market is gonna come into that area. So we spend time on the areas that we can control. I must make sure that I have a criteria in the market so that I'm not doing just anything in the market. I just come into the market and I'm doing anything. No, I must have what I do in the market, what I see in the market that informs me to take a particular decision on the market. I must have that. That must be down, right? And some of the things that you would actually learn when you're coming into the control area. So the absolute control area. Let me just basically list a few of them, right? Everything that you study comes under these things, right? Hey, I didn't say call me right now. Oh, sorry, someone is calling me. Maybe someone is calling me. Maybe the person has time that is gonna come into that region, right? Okay, so let's take a look at this. So direction. Charlie, we need the direction of the market. Like, we need the direction of the market. Not so that we trade in the direction of the market, but so that we at least know if pullbacks are coming in. So even if we are trading pullbacks, we know. You understand it? So sometimes when I teach people and I say, okay, it's better to follow the direction of the market. But also, if you get an opportunity that goes against the market, you could actually take it. I do take those trades, right? But I must know that this one is a pullback on this, so that at least I know where to stop myself when it comes to profit. Profit taking is one of the hardest things in the market. I had a friend of mine years ago tell me that, hey, Charlie, you get great trades in the market, but it looks like you don't want to take profit. You don't like profit, right? And I started renewing my mind. I said, this is true. Let me start, like taking a lot of the profits that comes in the market. So I see profit, I take, I withdraw. So you got to a time where I started doing this thing, withdraw a part of your profit every weekend. And I've been doing it since. I hope you get it. So direction, where is the market going to? Where is the market going to? Is it towards the upside? Is it towards the downside? So it means that everything that you need to learn in order for you to in order for you to be able to know the direction of the market, you need to learn. And so now we say, okay, so what are some of the things that we are going to learn when we are looking for the direction of the market? Okay, you are going to be learning candlestick patterns and formations. You are going to be learning, chart patterns. You are going to be learning demand and supply, resistance and support. All these things can actually show you the direction of the market. It means that you need to be well abreast with all of these things. Now you get a concept. So I'm now giving you a foundational platform to be able to guide you when you are learning in the market. Okay, why am I learning candlestick patterns and formation? You are learning candlestick patterns and formation because you are trying to see what the direction of the market actually is at a particular point in time. You are learning trend lines because you are trying to see where the direction of the market is actually going at a particular point in time. I hope you understand. Great. So now let's move on. So direction. Then, so where is the market going to? Then we have structure. How? That one asks how. Whilst market is going towards, so as you have identified your direction in the market, whilst market is going towards that direction, how is it traveling? Like how is it traveling? Yes, we can identify that price is moving from point A to point B. So we can identify the price moving from point A and going to what? Point B. Probably point B could even be here, right? Probably point B could even be what? All the way up here as point B. But how is market traveling towards point B? Okay, so first of all, price moved from here, came here, dropped down, moved here, came here, went all the way up into this region, then started dropping from there, up, down, up, down, up, down. But we thought price was supposed to just complete this. That is structure. How we get it? Price comes down, up, down, up, down, up, down. Eventually, price comes all the way into that region here. Then rejects off this area. Then price starts going back towards the upside like that. Then at the point, price comes down, reject off this area, price goes up like that. So at the end of the day, you realize that price up, down, eventually it reaches that particular area. So you were here, you were trying to get here, but price just did all of this and then you couldn't just wait. So you had to exit that trade. Someone also waited and decided to what? Pick the trade from here. And they rode that trade all the way to this particular region. They are like, oh no, the market is not fair. The market is not fair. I was waiting for this thing last week and it didn't happen, you know. And then this week, I even thought that I was going to go for continuations to complete it. And then price took me out, you know. And then this person who didn't even struggle came in and then price has just taken them there straight forward. I'll be getting. But you can't just basically tell what the market is going to do at a particular point. You can only speculate. I'll be getting. Yeah. Sorry, I took off what we were writing around this area. Great. So direction. Structure is asking how is market traveling, what's going to. So now we need to learn so that we know where market is moving from. Yes, we know that market is going from point A to point B, but whilst market is going from point A to point B, knowing how exactly it is traveling also matters. So that we know that, okay, higher highs, higher lows, higher highs, higher lows. Let me attack the market from this area. Okay, at this point, market is sitting at a significant swing low point. If I go in there, it's going to be a problem. You know, like all these things, you learn it. That is why basically you learn from this area. Now, after delving into structure, you realize that it opens up different areas also. Now, learning the structure, you have now gotten to the point where you understand, okay, the structure also leaves what? Significant points. So there was significant, or let me just peg it as what? Swing points. Swing points. So, okay, so within the structure, there are swing points. Okay, so there are areas, for instance, if I'm picking a public transport from point A to point B, the public transports that I know in my country can basically pass some different places that you never knew existed, but they are still going to the destination that you're going to. Others will just basically use the straight road. There are times when people, when these public transports pass these areas that you didn't even know, someone will tell you this is where I'll alight. It means that is where the person was going, but if the transportation was going straight forward, they would have exited on the main road and probably walked to that particular area. But now that you have passed in front of me, let me just alight over here. You get it? So at the end of the day, there are so, like many things that comes along with it. So swing points basically says, okay, price is moving from point A to point B. But as price is going from point A to point B and it's what basically doing that and then coming like that and then coming like that, I should probably take a look at these areas. That. Okay, so now based on that, it means that if price is coming into this area, there's a tendency for price to start moving away from these regions any point in time to continue that movement towards the upside. Okay, let me pay attention to that area. You know, so you learn all the principles that govern that particular area and you move forward with it. How are you understanding that? Great. Let's move on. I didn't intend to teach you this morning, but when the opportunity arises, let me just teach, right? Let me take a pause and then breathe, right? And you know, like let me just go to the comment area and then take a look at the comments, right? All right. So I see you. It says highest. That's my nickname. Highest. William, I see you. I see if you're enjoying this, tell me something in the comment section. Power for Real says, this is the problem we are dealing with now. Assuming you are waiting for the trade to drop to your POI, whilst we can't control the time, me for one end up doing other things in the market, which is really real, right? Really, really real. Let me bring it up on the screen. This is the problem that we are dealing with currently. Assuming we are waiting for the trade to drop to your POI. So you know your point of interest though, right? You know your point of interest. But because you cannot control the time and then there are so many things that comes into the mind. So you see, I taught something I've taught something to my students yesterday, like night, 7 p.m. we are having a session, right? And I was telling them that the interesting thing about the market is it all begins in the head. Whether you lose a trade or win a trade, it all begins in the head first before you even replicate that. That's why the first chart that needs to be studied is yourself before you even come and study this chart. And we were having that conversation last night. It was a beautiful conversation, right? The first chart that needs to be studied is yourself. Because if you do not study yourself and you think you have not mastered yourself, but you can master the market, you must be joking. I ain't gonna lie to you. You must be joking. How they get it? So yes, this is one of the problems that we have. It means that the problem is what? Is discipline. The discipline to be able to see that this is where I'm looking forward to. That is the area that I'm waiting for it to come to. If it is not there, I'm not triggering any trade. I'm waiting until that trade comes into that particular region and basically move on with it. So I was telling my students that, see, sometimes when a student comes in and says, this is the problem that I'm having in the market, right? It is easy for a mentor to rush in and say, oh, you need a trading journal. Start journaling your trades. No. Start having trading rules. No. Sometimes the guy has trading rules pasted on the walls of like his trading room. Right. But at the end of the day, he's still not following the rules. I'll be getting it. He's still not following the rules. I'll be understand that. He's still not following the rules. And we must have a conversation around that. It's psychological. It's not necessarily he drawing rules. So most of my students, I told them, Charlie, the area where it has gotten to, please, let me recommend you to Cliff Ochekuna. Straightforward. Charlie Cliff. This guy, has this problem. Or I'll tell you, Charlie, go to him and tell him that you are from me and basically A, B, C, D. He's going to help you through it. And a lot of these individuals go to Cliff, they come back and they are like, KEMMA, I have a new perspective to the market. I say, yes, you needed that. You needed that. How do you get it? It's basically, that's how it is. I'm a part of a trading geniuses in the UAE, an organization called ILMO, right? And I'm part of the trading geniuses. I actually command the area GEMS. GEMS actually has to deal with pairs like the gold market, so mainly commodities, right? So gold, silver, subsequently we'll be adding more onto that. Now, the interesting thing is, last year, we did some good trading. And Cliff and I came out on top as good traders. But I realized that significantly, half of the year, I didn't do much. From like January all the way to June, I didn't do much. It was just from June to I think November trading. That actually, we did well. Now, the interesting thing is, if we are taking a look at what exactly happened during that time, between May, June, into July, I was in a bit of a distress. A strong distress on the market. And I went to Cliff. Cliff is the company psychologist and also the education director. So I went to him and then I said, I know a lot of you know Cliff Ochekuna. If you don't know him, look him up. So I went to him and then I said, Charlie, bro, I'm having this thing weigh my mind. And so I've not been trading them. I've not even touched the market for the past 3 weeks. What do you say about it? And then he sat me down and said, A, B, C. So some of you think that, if an individual says he's a pro trader or has reached that height where, okay, they are basically nurturing other traders through the process to make it easy for them, that person doesn't have a problem. The giver sometimes also needs. I hope you get it. The giver also sometimes needs. And if the giver needs, who gives the giver? Huh? Who gives the giver? I hope you understand that. So at the end of the day, went through that, and then right after, took off, and boom, it was just beautiful. Just beautiful. I was like, I love this. And even coming all the way into this year, it was just beautiful. All right. Prince says reaching TP is so hard that 90% of the time you close manually when market begins to approach my TP and reverses. So one of the great. So my other camera, I saw that my other camera was shaking. That's why I switched it. So one of the interesting things about the market, right? The craft that we must learn to accept is taking profits. It's one of the most difficult parts. A lot of individuals don't talk about it so much. Difficult. Hey, see, you can actually get a very good trade, very good entry, very good, like stop loss points, because you all know that there is where a stop loss needs to be and where you want your stop loss to be. If you keep putting your stop loss where you want it to be, market will keep taking you out. A stop loss must always be where it needs to be. All right. So at the end of the day, you realize that you get a good stop loss point, good entry point. Price has actually dropped in profit. But the next thing is, after you have taken that trade, the next decision that comes closing your profit, right, becomes a problem. Sometimes, where do I close? Is it going to go more? And that's why there are individuals that I know, right, in the industry, friends of mine, who have basically accustomed themselves to taking 1:1 risk to reward. They don't want anything else to do with anything. 1:1 risk to reward. That is it for them. That is what they are looking for. Once they get that, they are gone. Up again. And it's working for them. So at the end of the day, he gets his 1:1, wake up, come to the market, 1:1, he's done. He's out of the market. Whatever it is that you guys want to discuss within the day, he's not a part of it. He goes back and then start doing content and then, talking to the community and then enjoying himself here and there. And it's working for him brilliantly. But you need to also know how to work around that, because some of us, you have $100. You just made $10 on that $100 in one trade, and you feel like you have not done enough for the day. Guy, you just made 10% on the capital. Shut that trade, shut that, MT5 down, and then go about your daily duties. Tomorrow, come back and attack the market again. But some of us go back into the market, and then we go back to donate that particular profit that we made. We are all at a point in time victims of the same thing. And that's why we are able to teach our experiences to you guys. I'll be getting over and over again. It happens. And we must be able to take a look at that. So coming back into this area. Great. It says, King of LOTS, I'm lucky to be here this morning. Awesome. So for those who don't know LOTS is simply the loss of the swings. That's basically the strategy that I use, right? Deduced from a lot of trading minds, loss of the swings. This is my proprietary strategy that I trade on the market, encompasses several principles, very, very easy to trade. I can even teach it within 2 hours to individuals, and they can be able to assimilate it and get it and trade easily on the market along with me. Many of the individuals that pick trades on the market, I didn't used to give signals. I just started giving signals recently, because by the time I wake up, my community, everybody showing a trade because everybody picked it. And that was the kind of people that I wanted to bring up. People that don't rely on signals. They can actually look at the market and say, based on this and that, I'm seeing that price is going to drop from here to there. Therefore, I am looking to pick that particular trade. This is the kind of people that I was looking out for. So that if an individual drops a setup in the chart, I can pick that setup also, because I know that they are looking at a particular thing that I also am looking at. How do you understand? Great. So let's move on. So swing points in the market. Basically, after swing points in the market, that is not done, because it's not done, right? We look out for what we call premium. and discount regions. There's a whole theory about premium and discount regions that I cannot basically, talk about here. But all I'm going to say is within a particular swing, right, movement from one area to the next, when price is dropping down, sometimes have you noticed that as soon as price gives you a little bit of pullback, you feel like that is it, and you start jumping into the market around that area, only to see that price was dropping further. Sometimes you have traded that push, okay, a little bit, then you buy, okay, price goes a little bit, you buy, then around that area you bought, then price begins to drop. Then you're like, okay, adding positions, adding positions, adding positions, adding positions. By the time you realize all your account is gone, and then now price basically starts turning around from here and then going. And you are watching price go your direction, but your money is finished. Huh? You're watching price go your direction, but your money is finished because you didn't use good risk reward management, because you didn't apply good risk management on the market. I'll dedicate a session to basically talking about risk management only. All right. Great. Let's move on. So at the end of the day, premium and discount region shows us in the loss of the swings where to attack price from, because I learned from some of the trading grades that even though they all had separate or different trading approach, right, they all had certain criteria that they actually were, always going in with. All of them, almost all of them. One of the things was to wait for markets to come to them before they actually trigger a trade. So waiting for market to come into an area, which means that patience was paramount in their trading, all of them. And you also realize that the discipline in the wait was also very important. And then also following criteria when price had actually reached out in their areas was also a criteria. I mean, those days, they didn't use much of what price action like this, but they used data analysis to actually trade and all. And they still managed to go according to these same principles, and it helped them a lot. Now, some of these trading grades, you can actually find, like some of them in the Market Wizard, the New Market Wizard. These are books that basically you can read on, and then you can find many of these trading grades. They communicate about some of these things that they do in the market, lapses that came in, shortcomings, and then also how they came out of those shortcomings as well. All right, so that is basically one area to look at. Now, let's move on. So that is the principle that shows us where to attack price from when we are buying and where to attack price from when we are selling. If we see a point of interest in a particular area, should we actually tag that point of interest as a good one for us to pick a trade from? And the interesting thing is, because we have accepted it, even if price rejected from that point of interest, we are not pained. You understand? We are not pained. There was an area we were looking out for. It didn't come into that area. We are okay. Next time we are going to get it. Bringing up traders like that, sort of one way or the other, gives me that comfort for me to be able to know that these traders are actually trading the market, not necessarily in there, doing anything at all. They are following due process. And one of the things that actually builds a trader is the consistency test that we do, right? The consistency test that we do is paramount. Consistency test in the sense that you as a trader is able to go through that same process that the mentor actually communicated. Okay, A, B, C, D is what I look out for in order to jump into the market. So you two, you are following the same thing. A, B, C, D is what, and you have basically cut yourself a timeline. So maybe 40 trading days, 60 trading days. I'm doing this thing over and over for the next 60 trading days to see if it's actually working for me, which areas I need to tweak to personalize, and then all right. Then once we come out of that 60 trading days, you could evaluate the whole process and say, I had 40 trading days really good. I had 10 break evens. I had 10 losses. Okay, so is it a good system for me to keep using, or I should drop it? Is there an area for me to tweak, an area for me to work on? Then you are moving forward. The problem is a lot of you pick a strategy and you don't go through this process. You just do 1, 2, 1, 2. Then you're like, this strategy is not helping me. Then you jump onto the next. So you flip strategies like you are flipping pancakes. You flip strategies like you are flipping pancakes, right? So price is going to close strongly on this, which means that new candle focus on my entry time frame is going to come as sells. Never trust a candle that has not closed yet. Even with the 21 seconds, it could reject off and go back in there. So I never trust candles that have not closed yet, right? But once it closes like that, it gives me the affirmative that there's a tendency for continuation towards the downside, as I was saying earlier on. So we could basically see, price continuing into the lows of that particular area. First, this area might pose as a threat, but like off everything else, we may be able to see price go towards the downside. So this is what I'm going to basically do now. Around that area currently is a daily low point, so it's really, really interesting region, but we're still gonna have that. Great. So first off, let me come to the 4-hour time frame perspective. 4-hour broke beneath the region, and it's currently showing towards the downside. Like we might be dropping further towards the downside, like that. We're anticipating a price may come back into the region up in that area. So it means that that high point around this area is a very interesting region for price to come back into for sales once we have that pullback into that region. Also, price could easily continue. Just like I was saying, two main things can happen, either continuation or price pulling back into the highs. If price is continuing towards the downside, it would basically show that continuation, and then we could basically have that sell trades coming in for that into that area. It's sort of a 300 pip trade on the market. And then now coming to my entry time frame as well, this poses as a good confirmation for a drop, and good confirmation for a drop. I'm going to use green to peg that, and I'm going to come here and just basically do that to lighten the middle area, right? I don't want to have too many lines on my chart. I want a clean chart. So what I'm basically going to do is going to look out for something like that. Right. So there's a tendency for price to do that and then what? And then drop down. If we break above this region, is an invalidation, which means we might be seeing price go towards the upside. So that is basically it for that area. So let's keep an eye on it. All right. Stop loss point, 80 pips, 100 pips. We could easily use 50 pips around this area, but I usually trade with, like that comfort. I need that comfort. So usually I give myself that room, right? So 100 pips on good. I know the currency that I'm trading. I know the asset that I'm trading. So sometimes I give that room for the asset to be able to breathe, right? Basically what it means is we might have price pull back and then and then just start moving towards the downside like that. So let's see what price does. If price actually gives in that continuation towards the downside like that, this area might pose as a very, very disturbing region here. So let's look out for that area. But like until then, it's still gonna give us anyways more than 1:1 risk to reward, 1:1.7 risk to reward, even if that area is posing as a threat. And then continuations might come all the way into this region. A break above that area here is an invalidation. So three main things that an individual can basically have: entry, stop regions. The stop regions encompasses your stop loss and then your take profit point. And then also you have an invalidation. So invalidation, what would happen for you to now say, okay, this thing that I was looking out for is a no for me. I was looking out for sales, but for now, I'm going to pause on the sales and then start seeing what the market is going to do. That is this area for me, that green line here. 40, let's say 40-50 region, right? 40-50 region break closure above on my entry time frame is basically going to show me that, hey, you were looking for sales, but now pause and then study what market is going to do, because you have broken above your invalidation region. That way, sometimes I could close trades earlier before they get to my stop loss levels. I'll be getting great. So that is also one of the tricks that I'm showing you in managing a trade on the market. All right. So let's see that. Okay. Great. Hey, you guys, you are calling me, calling me on my line like that. Okay. So Power says, is it confirmed now with the live every landing session, or it will be random? Okay, so I'm working on it currently. It will be random. It will be random for now, for this month, right? For this month, the live sessions will be random. The reason why I'm saying it will be random is the fact that I'm a family man, and then sometimes some needs arises. There are some mornings that I need to rush as fast as possible, and like be out of the house. There are mornings where like it's easy. Yes, there are mornings where it's easy for me to be able to do a live session. I hope you get it. So what I would basically say is, for now, this month, it will be random. But I'm promising that subsequently after this month, it's going to be consistently for a period of time, so that everybody knows that, okay, this time KEMMA comes live, so this time we need to be on the live. Also, I'm looking for someone who can help me go live on TikTok. I'm trying to find ways and means to do that, but I'm unable to do it. So if you have knowledge of how to go live on TikTok, whilst I'm sharing, I'll be sharing my screen, sharing my trading screen like this, right? Kindly let me know. You can message the number that I put on the screen here, like that. Right? You can message this number, and then just what? And just get to me. We'll talk. All right? On WhatsApp. On WhatsApp. Yes. So you can message me on WhatsApp or call me on WhatsApp, and you can actually get me. Let's have a conversation. So once you are messaging, just write KEMMA, it's about a TikTok, and then I'll basically know that, okay, this is what it's about. Then we'll schedule a time and then have a conversation. All right. So I want to be able to do that within this month before we go into next month. So Power for Real. It's not confirmed that we're doing live sessions, landing session. Sometimes it's going to be London, sometimes it's going to be New York, but subsequently I'll bring a specific timeline that we will all be able to adjust to. I'll be getting. Okay, so they say I have to get 1K followers first. Oh, awesome. Great. Then it means that I need to work on that, because TikTok is not an area where I play. So I think I have to start sharing on my TikTok for individuals to start joining in, so that I can start going live on there, right? Yes. So I'll just basically put it out on my Instagram page and my community page that I want to also go live on TikTok. And currently I'm having like 300 followers. Yes. So I want to be able to beef it up so that we can all be able to so that we can basically do this on TikTok as well. I'll be getting. So 1K followers, guys, it begins with you. Start at KEMMA Trades. Start like following the KEMMA Trades platform on there. All right. Yes. All right. You can join my trading community at KEMMA Trades Forex on Telegram. You can also follow me on Instagram at KEMMA Trades. You can follow me on all social media platforms at KEMMA Trades. So far as is verified, please make sure it's verified. X is verified. Instagram is verified. Telegram is verified. When you're messaging anybody named KEMMA Trades on Telegram, make sure that it is verified. I hope you get it. Yes. Drop the link here so that we can share it. So I can just type in the link and then basically it shares. Let's see. So tiktok.com/KEMMA trades. I don't know if that's gonna bring a link, right? Hmm. I currently don't know how to do that link. I'd basically learn how to do that as well. And you know, the beginning stage of everything is very rough, but I love the journey that I'm going through currently, learning some things, you know, like on the job, learning on the job, you're right. And I'll take my time and then basically do most of these things, and it would be lovely, right? So I'm still monitoring this. I want to be able to put it out there. I could have, if you can, you know, like monitor it as well. And once it comes into that area, basically we can all pick the trade. It's been 1 hour, 30 minutes already. And I'll go off. But when price comes into these significant areas that I'm looking for, I might as well come back on the live again so that we have a session. So I'm looking out for 2 main areas currently. I'm looking out for this area as a sell region, potential sell, you know, like zone. I could refine that and bring it down into that area like that. There's a tendency for me to even refine it more, but you know, let's just peg it around this region like that, right? Around this region like that. These whole areas are very, very sensitive regions. Whatever it is, when I see confirmations, I'll give heads up, and then we can all basically jump in. I'll be getting. Can you tell if you have a session tomorrow or not? Yes, I can tell. We will have a session tomorrow. As for that one, I can tell. We would have a session tomorrow morning. All right. We'll all be here. We'll all come together. We'll have that session. Yep. So tomorrow morning, we're back on live. Don't miss out. Share the link. And basically it's the same link that we'll be using. So you can share the same link. And once we go live, you can basically share the link and then we'll all have it. I'll be getting it. Awesome. Awesome, awesome, awesome. Lovely, lovely team. I've had over 100 eyeballs currently on this particular live session. I'm privileged to have that. It doesn't happen on every new live session that you go on, but it's happened here. And I'm glad that the first or the maiden sessions are going so well. And subsequently, you're going to learn so much from me because I'm coming all out currently. I'm currently doing some YouTube videos as well. And very soon, back-to-back YouTube videos are going to be dropping on the page. You just basically like, comment, and then share them so that the page would actually grow. Love you all. And basically join the main community. I'll be dropping this in there so that you basically have that anything else that, you know, comes in play, or if there's anything that you're supposed to know, you basically get that information on the main page as well. I'll be getting. Awesome. Have a wonderful day, everyone. If we will come live again, I'll basically share the link all around so that we'll be able to jump in on the live once again. Stay blessed, everyone, and I'll see you all. KEMMA, can you please drop how the sessions would be like? How exactly do you mean? It's gonna be a live session. It's gonna be live trading session. It's gonna be market analysis. Yes, it's gonna be market analysis. It's gonna be live trading sessions. So, for instance, if price should have come into this region, we would have all been able to pick that trade. Now, having said that, it does not necessarily mean that it is wrong to pick the trade from here. Now, watch this. I can pick the trade from here and actually drop with that particular movement, knowing that price may be looking to go further towards the downside. I could have, you know, like the number of pips. But the risk that is allocated to it, I ask myself the question, can my account hold that drawdown? That is some of the things that we will be talking about, you know, like it's all education. So that's some of the things that we're talking about. So if I'm picking the trade here, there's where a stop loss needs to be. So it's not that I just want to set 100 pips. If I pick that trade from here, after seeing that confirmation, I'm going to have to put my stop loss somewhere around this region. Now, the question is, can I afford 150 pips on my trading account? I understand. Then basically that's how it goes. So if I'm going to miss out on this trade. I'm missing out because it did not come into my criteria or did not come into my area of interest where I was looking for it to basically pull back into and then what drop down. And I'm okay missing out on the trade than picking a trade and then putting stop loss where I didn't, like plan for, or I haven't planned for in my criteria, or I'm not comfortable with. I'll pick it. Yes. So if you are willing to put that stop loss all the way above that particular region, why not? Like it's basically, but I would want to see price come into this area first before I actually execute that trade. And with 100 pips in stop loss around this region, I would basically go in on a low lot and see through on that. Yes. So, all right, thanks so much for the insight. I'll see you tomorrow. We love you more and appreciate you. I appreciate you, Jackie. Power, I'll see you tomorrow. Your reputation precedes you, sir. Always a nice session. We'll make 1K happen. Thanks so much. It has to happen. We have to grow. We have to take it, like this to the world. We have to just keep on communicating it out there. Can you tell if you have it? Okay, yes, I've already mentioned that. And the nickname is highest. Very soon, I think I have to change the name KEMMA Trades and just basically make it highest. Highest trades only. If it's not the highest, we won't pick it. All right. So awesome. Love you all. I'll see you on the next session. Stay blessed. Be in the community. I'm going to share today's trade in the community as well once it gets to my area of interest or I get any confirmation that says we should jump in on that particular trade. Stay blessed once again.